Hey everybody, welcome back to our channel. In this video, I want to share with you a case study. This is a client that came to us the end of 2023, so the end of last year, and they had a big problem. Their problem was between the two of them, they were just making way too much money. Husband and wife making 750K. Between the two of them, with a half of a million in W-2 for the husband and about a 250K net income from the wife's small consulting business. And their primary complaint when they came to us was, "Oh, we're just paying way too much taxes." I think they were paying somewhere between 150 and 200K, which is insane. That's our tax code is written to screw you over the more you make. And so they wanted help, and they had a CPA at the time. And that CPA wasn't really giving them tax advice. That's nothing bad about their CPA. What likely happened, and this happens a lot, we see this all the time, their CPA just was not engaged to help them in this way. People think, oh, I have a CPA, so I'm covered. Like, okay, I got my CPA, so I've checked that box. CPAs are like doctors, are like attorneys. We all have different specialties and focuses. There are many CPAs that don't know anything about taxes, and there are CPAs that are absolute ninja masters at taxes. In our client's case, they were working with somebody that was really only engaged to do their tax returns, but not strategically plan with them to reduce what they were paying. And that's where there's a disconnect. The client's unhappy. The CPA says, well, I'm just doing what you paid me to do. So we come in and we actually do tax planning, and we immediately identify the strategy that would work for our client. One of the things they mentioned was they were very interested in reducing, or rather in increasing what they contribute to retirement. And their other CPA eventually mentioned to them, oh, you could do a SEP, a self-employment employment plan, IRA. And that's good, but it really didn't meet the needs of our client. They wanted to accelerate what they were contributing to their retirement. So there are plans where you can contribute not the 60 or 70K limits of a SEP or a 401K. You can contribute 200 grand or more to what's called a cash balance plan. This is an advanced retirement plan. It's a type of pension, and that is the big benefit of it. It really increases the maximum that you can contribute per year to your retirement. And just like with a 401K, all the dollars that you contribute are tax deferred. So just immediate win. Now, is this going to make sense for everyone? No, absolutely not. There are so many franchisees and business owners and wealthy individuals that we connect with that this is actually a terrible idea for them. They might not care about retirement. You might not care about retirement. You might not be in a position where you have the funds to contribute in this way. A big benefit in our client's case too is the wife's small business is just her. So the nice thing about that is with a cash balance plan, you cannot discriminate. You have to contribute, or have everybody have the opportunity to contribute that works in your business. But if you're the only employee, then you can just put all the benefit to yourself. So absolute win. They saved 76, they saved $76,000. They saved $76,000 off of their 2023 tax bill because of this one strategy. Now, we gave them a bunch more, and actually between 23, 24, and 25, you're going to save close to 300 grand in taxes, not deductions, taxes paid. If you knew today that over the next 3 years, from the sky, 300 grand was going to fall into your lap, what would that change? What would you do with that? Would it matter? Is it a big deal? Yeah, I mean, just something to think about, but that's a question that our client has to answer now. It's a pretty good question to be presented with. So again, what I wanted to go over with you in this video is the recap of a client that we worked with. So again, the purpose of this video was to go over this case study of our client and how much we were able to save them in taxes. Open your mind a little bit to the idea that there are things that you might not be aware of that you could do that would reduce what you're paying. If this is a question that you might have, definitely can consult with your financial professional, your CPA, and explore this. And also think, like, if your CPA has not presented this to you as a concept, what are you engaged with your CPA to be doing? Thanks so much. Look forward to seeing you in the next one.